Okay, this is lesson 9, the first recording. I'll do the first couple of tabs of the assignment in this recording. And to get us started, let's look at what we have to do here, budgeted income statement and the budgeted statement of shareholders' equity. So we're going to get both of those going. Remember what your income statement is. This is the report that we use to collect information about our sales for the year and our costs for the year. So you see cost of goods sold and gross profit again, and you see all the SG&A expenses, right, that we've incurred. You also have some other income and expense items as well as the income tax to get the profit for the year. So this is again going to be our forecasted profit. And I've entered right next to it the actuals from 2019, so we can see, you know, how reasonable this looks relative to what we had. Okay, so we'll start off with, sorry about that, revenue. And we'll have to go back to the revenue budget. So we're going to start right here. Let's get that back up. My mouse is too sensitive. All right, so sales for the cafe are back on the sales budget. That makes sense, right? So go back to the sales budget. Let's see where it is. So here's your cafe stuff right there. Right, this is cafe, total sales right there. So that's it for 2020. And then the roasting is near the top. So they were roasting first and then cafe. So roasting, total sales, 2020, right? There you go. And then the cost of goods sold is also over there on those same tabs because they're built from sales, remember. So this is another tie-in to help you understand. I taught earlier that we always do sales first, right? Sales is the very first thing we budget, of course, because you got to start the income statement first too, right? It's got to get done so you can get profit, which then feeds equity, which then feeds the balance sheet. So that makes total sense. Okay, cost of goods sold for cafe is back down with the sales. So in the section, total cost of goods sold right there. And then cost of goods sold for roasting is back also, but near the top. So watch this one, you had to build it out. It included the cost of the beans. It included the cost of direct labor and the cost of manufacturing overhead. So these three pieces were combined to get the total cost of goods sold. Okay, that gives us our new total cost of goods sold and our new gross profit, which is, let's look at this. So if we take this number and we subtract this number, and then we divide by where we started. Okay, so that gives you an idea of how much growth you're going to get out of a 5% growth in sales. And the reason why you're getting a little bit more punch out of that than 5% is because you had some fixed costs that were in here. So it allows you to make money and above and beyond those fixed costs, right? So this was 5%. But the cost of goods sold didn't grow by that much because, again, there's fixed costs in there and they stay fixed no matter what level of volume. So it's really beneficial for them to grow their business. As long as they've got the capacity to do it, they can make a lot more money by increasing their sales. Okay. All right, let's grab our SG&A, which are right over on the SG&A budget right here. Make sure you get the grand total. So we had separate tabs for both roasting and cafe. We also had separate tabs here, but then I had you pull them together, remember? So you did roasting, you did cafe, and then I had you pull them together. So that's the piece of the combined piece, right? Once you grab that first one, you can just copy that down. They're all good to go, and that's perfect. All right, then for the rental income, I had asked you to just hold that constant, so we'll just copy it from here. That works for me. And we'll copy this, the cost of the rental expenses as well. So that's good to go. Now the investment, interest income from investments, you're going to find over in the investments tab, this red tab. So that's in this interest column, right? And that's the forecasted amount for 2020. And then this is the interest expense for 2020. So make sure you put that minus sign in there because it's a cost. And you're in the other income and expense, you got to show the brackets on these. So the mortgage amortization 2020 interest is that figure right there. Let me scroll up so you can see that's the interest column, right? and you're grabbing the grand total for the year right there. So you're grabbing all 12 of these because that's what's been incurred for 2020. Keep in mind you didn't pay all of that because this last one is due. And you'll see when we get to the balance sheet, we'll come back and grab what's due because we have not paid that yet, but we're going to accrue for it. We're going to pick it up. We haven't paid it yet, so then we have to accrue for it. We'll do that. All right, now this is the tax, so make sure you put equals and minus before you click on this. So you get 20% of that, and it's subtracted. And that is, in fact, the right number. If you look at the growth rate on that over the previous year, let's check that out. Okay, so check that out. On a 5% growth rate in sales, we got a 28% increase in profitability on the bottom line. And the reason why those growth rates are bigger on the bottom line than they were up above for sales is because we had fixed costs in here that didn't change. So all that profit is able to travel right down to the bottom line and increase our profitability on a percentage basis by quite a bit. Also on a dollar level basis, right? So we're forecasting that increase in our profitability. All right, let's go on to the next tab. I'm going to crunch that up a little bit because we're going to come back and grab that profit number. So if we go to the budgeted statement of stockholders' equity, so that's what this is, statement, I'm going to slip that in there, stockholders' equity. It's a corporation. Notice that you've got a couple years worth of data. This is all of 2018, this is all of 2019, and then you got to build 2020. So let's just verify that these are in fact the 2018 numbers. So those are ending amounts that should be on the balance sheet back here for 2018. So take a quick look, and now let's go. And they are in fact the same. And now take a quick look at these. That was 2019 right there. So go to our budgeted statement of stockholders' equity, and those are the numbers you just saw. All right, if you remember on our cash budget back here in cash receipts, we talked about not having sold any additional stock right there. So that is going to be a zero, this figure here. We haven't sold any additional stock in 2020. The profit you're going to have to catch by going back to what you just did. So here's the articulation where you pull back, pull in the amount of net income and add that to retained earnings for the year. All right, so these are going to be the amounts that we're going to transfer forward onto the balance sheet in the next video.